Switzerland versus US. Trade war escalates with tariffs. What it means for the Swiss economy. Imagine the shockwave that rippled through Switzerland when the US announced a staggering 39% tariff on Swiss imports. This move, part of President Donald Trump's aggressive trade restructuring policy, has left Switzerland scrambling to salvage its export-driven economy. The Swiss government, in a swift response, announced on Monday that it is preparing a more attractive offer in its trade negotiations with the United States. The goal? To avoid the devastating impact of these tariffs, which could severely damage the Swiss economy. But here's where it gets controversial. The U.S. administration has accused Switzerland of maintaining a unilateral trade relationship, claiming that Switzerland has not made meaningful concessions on removing trade barriers. This has sparked a heated debate, with Swiss officials and economists expressing surprise and frustration at being targeted by these measures. The Swiss government, in an official statement following an emergency meeting, confirmed its intention to continue talks with Washington, even after the 7th August deadline for the new tariffs to come into force. The Federal Council, the executive body of the Swiss government, stated, Switzerland enters this new phase ready to present a more attractive offer, taking U.S. concerns into account and seeking to ease the current tariff situation. While pledging to continue dialogue and secure fair trade treatment compared to its main competitors, the government did not disclose the details of the offer and stressed that it is not currently considering countermeasures. An unexpected blow for Switzerland. The Swiss economy was caught off guard on Friday by the U.S. administration's decision to impose some of the highest tariffs ever seen. This decision has caused widespread concern in economic circles, with industry organizations warning that tens of thousands of jobs are threatened by the new tariffs. It is estimated that the tariffs, which come into effect next Thursday, will affect about 60% of Swiss exports to the United States. This leaves few options for Bern, which considers Washington its largest market for exports of medicines, watches, machinery, and chocolate. The Swiss government declined to comment on whether President Karen Keller-Sutter would travel to Washington for direct talks, a proposal made by a number of officials, including Nick Hayek, CEO of watchmaker Swatch. According to economist Hans Gersbach of the ETH University in Zurich, a 39% tariff could reduce Switzerland's GDP by between 0.3% and 0.6%. If the pharmaceutical sector, which is currently untouched by the tariffs, is included. The contraction could exceed 0.7%, while long-term disruptions could reduce GDP by more than 1%. Nomura expects the escalation to prompt the Swiss National Bank to cut interest rates at its next meeting in September. U.S. accusations of unilateral trade relationship. The White House justified its decision to impose tariffs by accusing Switzerland of not making meaningful concessions on the issue of removing trade barriers, describing the current relations between the two countries as one-sided. On the other hand, Swiss officials and economists expressed surprise that their country was targeted by this measure, despite the depth of trade relations between the two sides. The Swiss statement noted that the volume of bilateral trade has quadrupled over the past 20 years, while Switzerland is the 6th largest foreign investor in the United States. It also pointed out that Switzerland had unilaterally abolished all customs duties on industrial goods as of the 1st of January 2024, allowing more than 99% of U.S. goods to enter the Swiss market without duties. Trade deficit at the center of the crisis. Trump blames the current regime for a trade deficit estimated at $1.2 trillion, $1.04 trillion. According to official data, Switzerland recorded a trade surplus with the U.S. of 38.5 billion Swiss francs, 41.2 billion euros, last year, putting it under the microscope as part of Trump's efforts to reduce the deficit. Swiss President Keller-Sutter told Reuters on Friday. The president is very focused on the trade deficit because he sees it as an economic loss for the United States. The U.S. decision has angered Switzerland because of what it sees as discrimination. Government data shows that the European Union, Japan, and South Korea, all of which have larger trade surpluses with Washington, have been able to negotiate tariffs of no more than 15%. Figures show that the EU's trade surplus with the U.S. is about $235 billion, 204 billion euros, compared to 70 billion, 61 billion euros for Japan, and 56 billion euros, 49 billion euros for South Korea. Options on the table. Swiss Economy Minister Guy Parmelin hinted over the weekend that the government is open to reviewing its offer, talking about options including buying U.S. liquefied natural gas and increasing Swiss investments in the U.S. However, some politicians have called for a stronger response, including one who suggested canceling a $6 billion CHS deal to buy F-35A Lightning II fighter jets from the U.S. In financial markets, the main Swiss stock index, SSMI, fell 0.4% on Monday, bucking the positive trend in Europe, where the Stoxx 600 index rose 0.8%. Shares of luxury watch companies, such as Richemont and Swatch, fell amid volatile trading. Richemont was down 1.5% after a 3.5% drop on the day, while Swatch was down 1.8% after a 5% loss earlier in the day. On the currency front, the Swiss franc was the worst performer against the dollar, rising 0.4% to CHF 0.873, nearing a one-month high. And this is the part most people miss. The real impact of these tariffs goes beyond just economic figures. It affects the livelihoods of thousands of Swiss workers and the stability of key industries. So, what do you think? Should Switzerland make more concessions to avoid these tariffs? Or should it stand firm and seek alternative measures? Let us know your thoughts in the comments below. U.S. tariffs on Swiss goods. How 39% tariffs will affect consumers. Imagine paying almost 40% more for your favorite Swiss chocolate, luxury watch, or skincare product. That's the stark reality facing U.S. consumers if a trade deal isn't reached to prevent a massive 39% tariff on Swiss goods. This isn't just about luxury items. It's about the potential ripple effect on the entire economy. Last week's announcement of this surprisingly high tariff rate sent shockwaves through political, analytical, and business circles. Many had anticipated a deal mirroring those struck with the European Union and the United Kingdom, which secured baseline rates of 15% and 10%, respectively. But here's where it gets controversial. Why such a significant difference? Some speculate it's a negotiating tactic, while others fear a deeper rift in trade relations. What do you think? Is this a fair move by the U.S., or is it unnecessarily punitive? The U.S. currently has a substantial trade deficit with Switzerland, totaling $38.3 billion in 2024. The Swiss government argues that this gap is partly due to Switzerland's role as the world's leading center for gold refining. Massive quantities of gold pass through the country for processing before being distributed globally. And this is the part most people miss. While gold and silver are significant exports, they're exempt from the U.S.'s reciprocal tariff policy launched in April. This exemption highlights the complexities of international trade and the specific considerations given to certain commodities. Beyond luxury goods, the U.S. is a major importer of Swiss pharmaceuticals and medical devices. While pharma products are currently exempt from the 39% levies, the industry remains uncertain about potential sector-specific tariffs under the U.S.'s separate Section 232 investigation. This uncertainty creates instability and makes long-term planning difficult for pharmaceutical companies. The potential impact on drug prices and healthcare costs for American consumers is a significant concern. However, the most immediate impact will likely be felt by consumers who enjoy Switzerland's renowned high-end products. Let's break down how this tariff could affect some key sectors. Watches. The U.S. is the largest overseas market for Swiss watches, with exports reaching $5.4 billion in 2024. To be labeled Swiss-made, at least 60% of a watch's production cost must be Swiss-based, and its technical development must occur in Switzerland. Paul Altieri, CEO of Bob's Watches, predicts a real shakeup in the market. He anticipates higher prices, longer lead times, and difficult choices for dealers who must decide whether to absorb the tariff or pass it on to customers. For example, the retail price of a Rolex Submariner could jump from $10,000 to nearly $14,000. Jean-Philippe Berthier of Vontobel calls a 39% tariff devastating for Swiss watch businesses, especially for entry to mid-level segments. He notes that companies have already increased prices by 5 to 10% earlier in the year, making another price hike difficult for U.S. consumers. For luxury brands like Rolex, Patek Philippe, and Audemars Piguet, long waiting lists might make it easier to increase prices, but even they will face challenges. Coffee. Nestlé. A Swiss consumer goods giant claims minimal direct impact because it produces over 90% of its U.S. sales locally. This is generally true for high-volume, low-ticket items like instant coffee and bottled water. However, Nestlé's Nespresso brand, known for its at-home coffee machines and capsule pods, could be exposed to higher rates and price increases, as Nespresso is manufactured entirely in Switzerland and exported globally. While Nestlé hasn't commented specifically on the impact, its recent results show strong double-digit growth in North America, suggesting that any tariff-related price increases could affect this growth. Skincare. Swiss beauty and skincare products, known for their quality and innovation, could also see price hikes. Companies that pride themselves on Swiss production, such as La Prairie, Valmont, and Mavala, may struggle to offset higher import costs. Lombard Odier notes that while Swiss firms can generally handle a 10 to 15% tariff, 39% is a much higher hurdle. Galderma, which produces Cetaphil, is largely excluded from global tariffs due to its production outside of Switzerland. However, its EU, UK, and Canadian production could be subject to higher levies, potentially impacting consumer costs. Luxury goods. Higher import duties are expected to increase the price of luxury goods, including Cartier and Van Cleef Arpels, owned by Richemont. BofA Securities estimates that 7% of Richemont's input costs would be exposed to higher Swiss tariffs, leading to higher consumer prices. Richemont acknowledges that tariffs could lead to increased prices, which could impact consumer demand. While some luxury exports might see increased demand despite price increases, Lombard Odier believes that price hikes will generally hurt consumer demand. Chocolate. Roger Wehrle, director of ChocoSwiss, warns that a 39% tariff would be passed on to consumers, causing a significant loss of U.S. business for many members. The recent appreciation of the Swiss franc against the U.S. dollar means the effective price increase could be closer to 55%. This will disproportionately affect small and medium-sized businesses that lack U.S. production sites. While Lindt Sprungli and Barry Callebaut have U.S. factories, smaller members like Camille Bloch and Laderac produce exclusively in Switzerland. Wehrle emphasizes that labeling chocolate as Swiss requires production in Switzerland, a crucial quality sign for international markets. This rule forced Toblerone to change its packaging in 2023 after moving some production to Slovakia. Ultimately, the 39% tariff on Swiss goods presents a complex challenge with potential consequences for U.S. consumers and businesses alike. The outcome hinges on ongoing negotiations and the ability of both sides to reach a mutually beneficial agreement. What are your thoughts on this situation? Do you think the U.S. is justified in imposing such high tariffs, or should a more collaborative approach be pursued? How will this affect your purchasing decisions? Share your opinions in the comments below. How Trump's 39% tariffs shock Swiss exports. Economic impact, government response. Shock and awe. Trump's tariff bombshell rocks Switzerland's Independence Day. Just as the echoes of Switzerland's Independence Day fireworks faded, a financial explosion rocked the Alpine nation. In a move that blindsided Europe's famously neutral country, Donald Trump announced a staggering 39% tariff on Swiss exports to America. But here's where it gets interesting. The sky-high rate isn't about cheese or chocolate. It's all about Trump's obsession with a particular shiny metal. Imagine celebrating your country's 734-year-old oath of independence, only to wake up to economic warfare the next morning. That's exactly what happened to the Swiss on August 2nd, 2025. The announcement sent shockwaves through the normally unflappable Swiss government and business community. Within days, crisis meetings were convened, and a flurry of consultations with industry leaders ensued. But why such an extreme tariff? And why Switzerland? The answer lies in the glittering world of precious metals. Trump's fascination with gold is well documented, and it seems Switzerland's robust gold export industry has caught his eye, and not in a good way. In a twist that's sure to raise eyebrows, the Swiss government isn't taking this lying down. They've announced plans to make America a more attractive offer. But what could this mean? A gold-plated statue of Trump in Zurich? Swiss Army knives for every American household? This is where the controversy